Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data including major markets news, analysis and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly in forex and commodities, and in recent years I have also set up my own trading robot, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Key highlights of the week ended July 17. European leaders reached a third bailout deal for Greece, worth up to 86 billion euros. After the Greek parliament voted in favor of austerity reforms on Wednesday, therefore allowing the Greek banks to open today. Nevertheless, capital controls will stay in place and limit the amount of money Greek people can withdraw. In the meantime, for the 8th consecutive meeting, the Governing Council decided to keep the K refinancing rate at 0.05%, the deposit rate at negative 0.2%, while the marginal lending rate at 0.3%. The ECB still believes that it can sustain inflation rates close to 2% in the medium term by fully implementing all of its monetary policy measures. In the UK, Bank of England Governor Mark Carney hinted that UK interest rates could rise at the turn of the year, adding that any lift in borrowing costs would be gradual and would not reach the pre-crisis level. Carney said he expected interest rates to rise over the course of next 3 years from the current level of 0.5%. Carney's comments put the UK Central Bank on track to follow the US Federal by hiking interest rates in the near future, after more than 6 years at record low level amid the fallout of the global financial crisis. In Canada, the Bank of Canada trimmed its benchmark overnight interest rate by 25 basis points to 0.5%, amid a more severe than expected effect of the sharp drop in oil prices and a weak recovery in non-energy sector. The central bank also downgraded its growth estimate compared to its April projection. The economic output is expected to have contracted modestly in the first half of the year, leading to higher excess capacity and additional downward pressure on inflation. However, the Bank of Canada predicts growth to resume in the 3 months through September and to exceed potential in the fourth quarter, supported by the non-resource sectors of the economy. The central bank now forecasts Canada's GDP to increase by just over 1% in 2015 and around 2.5% in the subsequent 2 years. According to the Bank of Canada's estimates, the economy will return to full capacity and inflation to 2% on a sustained basis in the beginning of 2015. This was my trade plan last week webinar. The 0.25% variation was hit and we can see the reaction of the market exactly as expected. The market moved more than 150 pips and it could be easy profitable trade if you just followed the plan. In Japan, the Bank of Japan decided to keep its current monetary settings unchanged and downgraded its economic growth outlook for fiscal 2015. At the same time, the central bank downgraded its GDP forecast to 1.7%, compared with its 2% growth outlook in April. Japan's economy likely entered a soft patch amid sluggish exports and household spending, although economists forecast growth to pick up in the July-September quarter. In addition to that, the Bank of Japan trimmed its 2015 inflation forecast to 0.7%, down from 0.8%. While many analysts doubt consumer prices growth will accelerate quickly, the Bank of Japan policy makers are confident a solid economic recovery will help drive inflation to 2% by around September next year. It's been a quiet start to the week in the Asian session, with the bank holiday in Japan that affected the trading volumes. Although there has been some interesting moves elsewhere, particularly in gold, which fell to a more than 5-year low and was down more than 5.5% at one stage. Gold saw an numerous amount of interest overnight as a sudden sell-off in the precious metal triggered a number of stop losses, knocking almost 60 US dollar off the price in less than a minute. It has since stabilized to trade back above $1,100, but I expect interest in it to remain today. Gold has looked bearish for a while now, but the yellow metal had been supported by safe haven flows as Greece appeared to be walking blindly towards the exit door. However, with those flows being hit by a last-minute deal that was reached and the Federal Reserve growing increasingly hawkish, making a rate hike this year, all the more likely taking away its inflation hedge appeal. Any support it did have has been diminished. Greek banks are reopened again today, although capital controls are likely to remain in place while the terms of the country's bailout are agreed. The Greek story is unlikely to be as great a factor in the markets going forward, with Greece appearing to have averted another serious crisis and the Eurozone remaining in one piece. The next part should just be a case of formalities, with broader agreement in place and the Greek parliament already underway with reforms. This week is looking a little quieter in terms of large economic events and data. We will get the minutes from the Bank of England meeting on Wednesday, which could be very interesting given the sudden change of heart among some members of the Monetary Policy Committee. The central bank is looking much more hawkish, and rather than the middle of next year, the end of this year is being suggested at the point at which rates could lift off from the record lows they currently find themselves in. The minutes and voting may shed further light on this. This week, we will also watch these events. I will talk in more details about some of these news. Australian CPI will be released on July 22nd at 2:30 a.m. London time. The Australian CPI report could affect the short-term trend for the Australian dollar, especially if we were to get a stronger reading, as the RBA has been very open about the overvaluation of the currency, not mentioning ongoing issues with soft landing in China. Australian quarterly CPI forecast 0.8%, previously 0.2%. Our trade plan. If we get a better than expected CPI data, we should see an instant appreciation of Australian dollar by at least of 40 pips within the hour or 2 hours. But if we get a worse than expected number, Australian dollar should drop and we should expect the market to consolidate. Of course, the deviation that I am looking for must be at least 0.3%, or I will skip the after news trade. On a minimum release of 1.1%, I would buy rise option of Australian dollar after a decent retracement. And if we get 0.5% or worse release, I would make a full option of Australian dollar. We will be looking to trade this release using after news retracement strategy. We will wait for the release, wait for market spike, and then wait for a decent retracement before entering the market and buying the option. And you can see a 1 minute chart for last release, during and after the news release. UK MPC meeting minutes will be released on July 22 at 9:30 a.m. London time. UK MPC meeting minutes will be the first time for the market to get an insider's look at the MPC meeting that took place 2 weeks ago, which ended up keeping both rates and APT unchanged. Although it's still highly unlikely for Bank of England to surprise the market, recent testimonies by Bank of England officials have been rather hawkish, to say the least. If there are at least 2 dissenting votes, we should see plenty of demons in sterling. UK MPC minutes rate forecast 009 votes, previously was 0092. The plan to trade this release is looking at the vote count. If we see a steady market reaction after the release, it may very well carry over to the New York session. Therefore, I'd wait for 2 minutes before even deciding on a trade. If market moves steadily, then I will follow that trend. We will trade this news release using the after news retracement strategy. New Zealand interest rate decision will be released on July 22 at 10 p.m. London time. New Zealand interest rates decision is expected to remain unchanged, as recent unexpected cut could have provided some breathing room for the central. However, with RBA and Bank of Canada resuming their easing policy, it's only logical to see the same steps in New Zealand. What analysts expect? They expect New Zealand interest rate decision at 3.25%. Previously, it was the same 3.25%. So now how to trade this news. Current forecast from economists surveyed by Bloomberg agree that it's unlikely to change the official rate at this meeting. However, in the event that Governor Wheeler surprises the market either by hike or cut the rates by 0.25%, we should see an immediate strong volatility in the Venezuelan dollar, which is a great opportunity to place a trade. And this is a 1 minute chart for June release during and after the news release. And you can see it was a surprise increase in interest rate by 0.25%, and we can see how much volatility happened. UK retail sales will be released on July 23 at 9:30 a.m. London time. UK retail sales is expected to come in at 0.4%, and you will be looking for a minimum deviation of about 0.5%. I would recommend to follow closely on the outcome from MPC minutes as a guide to the overall market sentiment for the currency. The monthly retail sales report is a direct measurement of consumer activities at the retail level. A higher release is generally good for the economy and better for its currency. A lower release is considered negative for the economy and not good for its currency. How to trade this news? Our tradable deviation 0.4% or surprise factor for UK retail sales is 0.9% to buy and minus 0.1% to sell. If our deviation is hit, we can expect the market to move at least 50 pips within the hour. We will be looking for an after news retracement trade for this release. So then I'd like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.